Hello everyone, this is Sian from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important instruments and their price movement predictions for the day, which falls on a Thursday, 19th of August 2021. Let's begin with the Dow Jones Index, where in the previous videos we said that the index is moving in an uptrend in the daily time frame, and we said that the uptrend is still ongoing regardless of the weakness signs that we have mentioned after the breaking upwards to level 35,120, where we said that due to the weakness signs being present, it supports the probability of a major downwards correctional movement taking place. After reaching around level 35,620, where the index formed a peak around it, it rebounded downwards off of it to correct and is currently being traded below level 34,760, which resembles an important horizontal support level in the 4-hour time frame. And by holding below it in the 4-hour time frame, as well as the 1-hour time frame, it will support the continuity of the current downtrend in the 4-hour time frame, as well as the smaller time frames, which will then continue to target around level 34,200 and then around level 33,730. If we notice the RSI indicator in the 4-hour time frame, then we can see that by moving around level 30 inside the oversold area, it supports the probability of rebounding upwards to correct before continuing with the downtrend. And if we notice the RSI indicator in the daily time frame, then we can see that not only did it retest level 50, which is a horizontal support level for the indicator in the daily time frame, but it also broke down through it, which further supports the continuity of the downtrend in the 4-hour time frame as well as the smaller time frames. That was it for the Dow Jones Index. Let's move on to the US oil. In the previous videos, we said that the US oil is moving in a downtrend in the 4-hour time frame inside the uptrend in the daily time frame, and we said that most of the signs, if not all of them, indicate the breaking down through level 65, which resembles a major horizontal support level for the US oil in the daily time frame as well as the smaller time frames. And we said that due to the US oil forming a peak around level 74.90, lower than the previous one, which was around level 76.40, it further supports the breaking down through level 65, which will then start a major downtrend in the daily time frame. The US oil broke down through level 65, which means that it has now officially started the downtrend in the daily time frame, and by holding below this level, it will support the continuity of this downtrend, which will continue to target around level 61.70 and then around level 57.15. If we notice the RSI indicator in the 4-hour time frame, then we can see that it is moving below level 30 inside the oversold area, which supports the probability of rebounding upwards to correct before continuing with the downtrend in the smaller time frames as well as the daily time frame. And if we notice the RSI indicator in the weekly time frame, then we can see that not only did it form a failure swing pattern, but it also broke down through level 61, which was a horizontal support level for the indicator in the uptrend in the weekly time frame. And due to the breaking down through level 61, it supports the breaking down through level 57.15, which, in case of breaking down through that level, the US oil will be targeting around level 43.95 and then around level 33.80. One thing to note is that the minimum target of breaking down through level 57.15 will be around level 51.20. Another thing to note is that if we look at the monthly time frame, then we can see that the US oil has formed a doji pattern in the shape of a hanging man, which is a reversing pattern of the previous upwards movement, and the current candle is a bearish candle, which indicates further probabilities of breaking down through level 57.15 and continuing with the downtrend in the smaller time frames. That was it for the US oil. Let's move on to the gold. In the previous videos, we were waiting for the gold to break down through the lower boundary of the upwards channel in the 1-hour time frame, or breaking down through level 1780 in order to continue with the downtrend in the 4-hour time frame or on the daily time frame. The gold broke down through the lower boundary of the upwards channel in the 1-hour time frame, where it is currently being traded around the lower boundary of the downwards channel that it formed in the 1-hour time frame as well as the 30 minutes time frame. And by breaking down through the lower boundary of the downwards channel, or by holding below level 1780, which resembled a horizontal support level in the 1-hour time frame, the gold will be continuing the downtrend in the 4-hour time frame as well as the daily time frame. If we notice the daily time frame, then we can see that after forming two doji patterns around level 1793, the current candle is a bearish one, and by closing as a bearish candle, it will support the formation of a peak around level 1793, which also supports the continuity of the downtrend in the daily time frame as well as the smaller time frames, which will then continue to target around level 1752 and 1717 as primary targets in the downtrend. If we notice the RSI indicator in the 4-hour time frame, then we can see that by rebounding down off of around level 70, it supports the continuity of the downtrend. That was it for the gold. Market Equity wishes you successful trading and have a nice day.